Welcome to the Phantom Investor, and this is an update video from my January 30th video about how far these markets will go. Now, since then, the S&P has formed a massive, what I consider a head and shoulders pattern. The Dow has sort of formed like a head and shoulders pattern within a head and shoulders pattern. So in the S&P, this would be like the first head and shoulders pattern, and here's the outer, like where this head would be like the inner head and shoulders, but it's the entire head with the left shoulder here, right shoulder here. So we want to see take the distance from the high to the neckline and then subtract it off where it breaks through the neckline to get to a prediction. And right here I figured out like the highs 48.19 to the neckline 41, so there's 653 points. That's the height of the head, and then I measure the distance down from where it breaks through, and I come up with 3381 as the predicted amount it's going to go down. So if we go to right about there, right about here, that's how far down it will go. Now let's compare that to my previous prediction where I was using the Fibonacci image. So here it is again, and we had the 100% line right here, and it says 3571. So if we carry this down to 3381, right about there, so a little past 100%. Now I drew these Fibonacci lines to the closing price. If we did it in the sense of open, high, low, close, let's see if that buttons up our prediction. So this would be using the open, high, low, close bar, and see if that gives us a better matching prediction. 31 versus 3381. So that's actually quite a bit closer. And you can see from here it's bounced off the 61.8% line and making its way down to the 100%. Okay, let's go with the Dow Jones. And here's the Dow Jones. And here's what I was talking about. There's a very well formed head and shoulders pattern here, but it's also part of a bigger head and shoulders pattern where this is the left shoulder, the inner head and shoulders like the head, right shoulder, with two possible necklines. Now here it went below this neckline. I'm not sure, it didn't close below, so I'm not going to say it's a breakthrough, but let's just do the math and assume it was. We have the high of the head from 36,935 to the orange neckline, because that's the one it pierced. So we got 4281 height of the head, and then the breakthrough and the projection down to 27,000, roughly 300. So that would be like if we came out to here, right to about there. So let's see how that matches up with my Fibonacci. So Fibonacci said 29,000 about, or 20, I would say about 29,800. And if we go down to 27,300, it actually matches perfectly with the next Fibonacci ratio up of 138.2%. So it's suggesting that once it hits the 100 line, it's going to continue down to the next Fibonacci level of 138.2. Interesting. Okay, so that was the Dow. Here we have the Nasdaq. I mean, you could do a head and shoulders analysis on this as well if you wanted. I'm just looking at where it's at. It's pierced below the 61.8% retracement. It's going back above. Maybe a little counter trend now we'll experience before it heads back down. And the Russell has come very close to the 100% line. where it's going to go. Maybe we're in a counter trend up. But depending on, the Russell seems to be further along in its journey down. Maybe that's the bottom. We'll see. Or maybe it's going to pierce it, go to the 138. We're gonna keep track of it. We got the resistance trend line. And we'll see if price action stays below here. It just broke through a little bit and then dived back down. You always know that's above, like a false breakthrough. It hovers above it and then it breaks right back down below it again. It can't keep up. So, I'm looking at the MACD, the RSI. I don't see anything healthy yet. So that was my synopsis of the markets. It is Friday, May 13th, a very unlucky day in general. And I don't think we've seen the bottom yet. But it's not tanking fast either. Okay, thanks for watching.